again, everybody. Coulter Brown here from the Northern Ag Network with this month's livestock market report. Cards on the table. This is probably one of the least optimistic reports we've brought to you in quite a while, but what I want to do today is keep the historical seasonal trends in the market in perspective and talk about why some of the bearish market news we got in October may actually point to reasons that this market could stay higher for longer. We're going to talk, of course, about the cattle futures and the fed cattle, and then get into the cattle on feed report, where we'll really spend some time looking at where we're at in regards to heifer retention. We'll also talk about feed costs, beef demand, the weather, and of course discuss the calf, bread count, and lamb markets. First off, though, want to mention the sponsors of our report, Ag Risk Advisors. As winter weather is starting to come back, a reminder to Ag Risk Advisor clients that their live long-range weather update with Brian Bledsoe will be November 13th. Head to prfadvisors.com to learn more and get connected there with Ag Risk Advisors so you can meet the December 1 PRF deadline. Well, the cattle futures found themselves with a sharp dose of reality in the month of October. We were trading at contract highs in September, but boy, the market took a big correction backwards. We're talking drops of $20 to $25 for a lot of these contracts. So that did take a little bit of bite out of us, but there is still reason for optimism. One of my main messages today is going to be that yes, the market did move lower, but we're still talking a historically strong market. In the feeder futures, things really did fall apart with the cattle on feed report. Certainly going to talk about more of that here in a moment. We saw the steepest drops in the feeder futures since 2020 when we were dealing with COVID. Limit down drops in both some of the feeders and live cattle. We haven't said limit down in quite a while. Now, live cattle didn't see near the pressure that the feeders did. They were lower. You can see the drops that we saw anywhere from $4 to $12 in the month-over-month change. Part of the reason we saw some support for live cattle was the cash trade. That's actually held up reasonably well in October and has been pretty range-bound since this summer. Still a little bit lower in the last month. Live sales primarily 182 to 186 and dress 288 to 292. Now, feed yards still clearing about $300 a head, getting plenty of help from lower feed costs this year. Packers, though, estimated to be losing about $75 a head right now, so they've reduced the weekly kill schedule down about 20 to 40,000 head a week. Beef demand also providing some support. We have flirted with going below the $3 mark on the choice box beef cutout, but really staying strong and should be improving here as we've entered the holiday beef buying time. But now let's talk about the cattle on feed report. There was a lot of nervousness ahead of the report, mainly related to where the placements figure would come in. It was expected to be 1% higher on the average guess, but actually came in 6% higher, the highest placement since 2021. Inventory in feed yards was up 1%, the first time in over a year we had a month-over-month gain, and marketing's down 11% in reaction to the reduced harvest pace, the slowest it's been actually since 2015. As I mentioned, the market crumbled in the wake of that report as it provided evidence that in the near term there's going to be more cattle available to the market than we thought. But we've been talking about tighter feeder supplies for a long time, so we didn't just magically create more cattle. Really, that increase in placements and on-feed inventories coming from drought-forced liquidation and overall lack of heifer retention and actually increased feeder cattle imports from Mexico. But when you look outside of feed yards, that supply of calves and feeders is down 1 million head from a year ago, the lowest point in October since 2014. So what we're doing is we're borrowing ahead on a tighter underlying supply. Those placements are going to be moving lower. And what I really want to focus on here is heifers. 84% of the increase in the on-feed inventory was heifers. As you look at those October numbers, it was the highest number of heifers for the month on record. 40% of the cattle on feed are heifers, so the industry continues to liquidate females. Monthly data through September shows total female slaughter, both cows and heifers, has averaged 52% for the last year. That's the highest 12-month rolling average since 1986. And as a percentage of feeder calf sales, heifers have remained above historical levels and above last year. All of that telling us that the herd is likely to continue to shrink. So we're probably talking another 1 to 2 years of higher prices, which, when we get to that bottom of the cow herd, that's really when we start to see heifer retention in earnest. And that just pulls the feeder cattle supply and beef production lower, which really does cause a surge in prices. But as we talk about rebuilding the herd, there's a lot of uncertainty out there. Uncertainty, of course, around the weather, but also expenses, interest rates, feed costs. So that gives us a little bit of reason to think maybe this expansion won't be as aggressive as what we saw a decade ago. Talk about feed costs, those have certainly come down. In Montana and Wyoming, USDA is telling us right now that most of the hay is priced in that 140 to 185 range. Should mention a lot of rained on hay on the market, so that is kind of pulling the average price lower. Corn prices also trending lower as harvest really picks up steam. A year ago, the cash corn price was $7.80 a bushel. Today, we're talking more like $4.50. And the winter weather forecast is expecting a return to more El Nino type conditions. Now, what that means in the northern plains is typically above normal temperatures and below normal precipitation. Certainly that's what the National Oceanic and Atmospheric Administration is forecasting for Montana, North Dakota, and northern Wyoming. Now, in the southern plains, they're saying improved moisture. So as we look at the drought outlook, that's telling us that most of the country should see an improvement in drought conditions. Unfortunately, northern Montana above the Missouri River expected to see drought conditions hold on through the next 3 months. Now that brings us to the calf market, where really through the beginning of October, the first week or 10 days, the calf market was holding in really well. Now that's partly a result of just lower overall cattle supplies. We just don't have as many feeders to sell this year, but also the weather allowed producers to keep cattle on grass longer, so we didn't wean those calves as early as we might have in past years, but then we kind of ran into a perfect storm where that cattle on feed report comes out, the calves all start coming to town, and then the winter storm happens. And so we did see some drops in the market. Some of our auction yards reporting $20 to $25 drops in just a week or two. So not what we want to see, but although that is fairly typical for this seasonal market, when the fall calf run happens, we see the market pull lower and not as much of a drop as we normally see. I'll still point out, you compare back to last year, we're talking $60 to $70 a hundredweight higher. That's about $300 a head. Across most of our auction markets now, you're seeing upper 4-weight steers kind of in the high $2.90s, low $3 money. 5-weight steers on the lighter end averaging $3. Your heavier 5-weights anywhere $275 to $290, and most of the 6-weight steers $250 to $275. Starting to test the bred cow market. That's the question I get all the time. What are these bred cows going to be worth? And they are moving up in price. At the Montana Angus Female Bonanza, saw bred heifers average 32% above last year. The bred cows 20% higher. In Torrington, I expected those prices to be a little better. But again, you compare back to last year, we're seeing strong increases, up 35% on the heifers, and the cows, on aged cows, 25 to 30% better. And wrapping up with the lamb market, we did see prices trend a little bit lower, which is typical, of course, for the lambs in the fall, but really above last year. At the Newell Sheepyard, 60-pound lambs selling from $214 to $239, 70-pounders $211 to $223, the 80-pound lambs at the public auction yards in Billings from $205 to $220, and 90-pound lambs $198 to $204. Well, thanks for joining us, but that's going to do it for this month's report. I'm Colter Brown, Northern Ag Network.